Illustration 17. From the following statement of profit and loss of Mukesh Limited, calculate gross profit ratio, net profit ratio. So based on whatever the amount or accounts given here, we have to calculate the gross profit ratio and net profit ratio. In particulars, we have revenue from operations, other incomes, which is income from investment, that is your total revenue, that is your income. You have 5,40,000. You have your expenses, which is purchase of stock and trade, change in inventories, employee benefit expenses, other expenses, provision for tax, and total expenses comes to rupees 3,90,000. Plus you also have a profit for that particular year as 1,50,000. Okay, now first, after looking into all these, you have to calculate, first write the gross profit ratio formula. Okay, so gross profit ratio is equal to gross profit divided by revenue from operations into 100. So this is the formula for calculating gross profit ratio. Now for calculating gross profit, we do not have actually directly the amount for gross profit, right? So in that case we need to use one more formula, which is gross profit is equal to revenue from operations minus cost of revenue from operations. We have our revenue from operations, which is given as 5 lakhs, but cost of revenue from operations will not be given directly. So we need to calculate cost of revenue from operations. So cost of revenue from operations is equal to purchase of stock in trade plus changes in inventories plus direct expenses. So this is the formula for calculating cost of revenue from operations, but we do not have direct expenses here. Instead we have only purchase of stock and trade, change in inventories. Okay, so add these two values, you get your cost of revenue from operations, right? So now cost of revenue from operations is equal to purchase of stock and trade plus changes in inventories, which is 1,80,000 plus 20,000. You get rupees 2 lakhs as your cost of revenue from operations. Then gross profit is equal to, we already have revenue from operations value, which is 5 lakhs, minus cost of revenue from operations, which we have calculated as 2 lakhs. So minus 2 lakhs, you get rupees 3 lakhs as your gross profit. Now gross profit 3 lakhs divided by revenue from operations, which is already given in the table. The first account will be revenue from operations 5 lakhs into 100. So when we cancel all these, we get 5 into 20. So 3 into 20 is 60%. This is your gross profit ratio. Next one is net profit ratio. So net profit after tax divided by revenue from operations into 100. Okay, so now here you have profit for the year as 1,50,000, which means already your tax is calculated here, right? So profit for the year, this is your net profit after tax, which is given as 1,50,000. So now net profit after tax 1,50,000 divided by revenue from operations. Already we have revenue from operations value as 5 lakhs. Just apply that in your formula. Cancel these values. 50 into 2 times is 100. 15 into 2, you get 30% as your net profit ratio.